Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time, May the 12th. I want to begin with a brief video because what we have been warning about for quite some time now with regard to the Chinese is beginning to really bear fruit. So let me play this for you.
Variety of reports that Chinese hackers are attempting to steal technology related to vaccine research. Is this something you're concerned about? What can you say?
So what else is new with China? What else is new? Tell me. I'm not happy with China. They should have stopped this at the source. They could have stopped it right at the source. So now you're telling me they're hacking. So I just say this, Steve, what else is new? We're watching it very closely.
If I could follow up, sir, the South China Morning Post, the Beijing newspaper, says that China would like to reopen negotiations on the trade deal to make the terms more favorable to them. Is this something you'd be interested in doing?
No, not at all. Not even a little bit, no.
Okay, so you could see in the president's voice or hear in the president's voice that there is a ton of frustration with the Chinese, and rightly so. Why would there not be frustration when you have, at current, in excess of 80,000 Americans dead for what could have been somewhat preventable, not totally preventable, possibly, but somewhat preventable, and what appears to be a conspiracy between the World Health Organization, China asked who to delay pandemic announcement, deny, sorry about this, only went live. Deny human-to-human transmission, according to German intelligence. This came out on the 10th. Fast forward, and keep in mind, we finance the World Health Organization to a far lesser extent. The Chinese, while they're number 2 in financing the World Health Organization, they are a distant second. Fast forward to later on the 10th, after China forced out reporters, Trump strikes back with severe restrictions on Chinese media. Things are beginning to heat up. Sorry about this. We're at war, make no mistake. White House, this is yesterday. Aggravating. White House officials blast China over COVID contagion. The death count keeps rising. This is Peter Navarro, a close ally of the president, opining about how Disneyland in Shanghai had opened while Disneyland in Orange County remains closed. And the question is, could it have been avoided? Yesterday, a tsunami of anger. Chinese officials call for renegotiation of Phase 1 trade deal. And you heard the president respond to that, what I'll call a floating of a trial balloon. Last night, late last night, yuan futures slide after Trump orders retirement fund investment in China stocks blocked. Finally, do you know that we have a hard time, if possible whatsoever, of auditing these companies that we invest our retirement dollars into? While U.S. companies can be audited at any time, that appears to be coming to an end. And the Chinese, if nothing else, need U.S. dollars to keep their government afloat. I've talked about this ad nauseum. Apple to move a fifth of iPhone production from China to India in massive supply chain shift. This is the second article in the past couple of days where Apple has announced movement of manufacturing. First, it was the earbuds, whatever they sell, those earbuds they make. They're moving those to Vietnam. We've been talking about Vietnam for quite some time. Malaysia as being beneficiaries. Now it appears China, now it appears that India will be a beneficiary as well. More from the 10th. U.S. deploys B-1B's warships in South China Sea as China nationalists call for invasion of Taiwan. We have 2 aircraft carrier battle groups offline due to COVID. If not now, when will they try to make their move? Keep in mind that the Chinese believe themselves to be peer-to-peers of the United States, and for certain reasons they have the right to feel that way. Certainly not on the freedom front. Future slide. This is as of last night. Future slide after China punishes Australia over coronavirus origins, bans 35% of beef imports. My guess is, given the shortages here in the United States, the president's going to pounce on this and say, you know what, Australia will be more than happy to take your beef, and that'll ratchet up the tensions. And this is where the rubber meets the road. China's long game. Why is all this being able to happen? Italy, China's Trojan horse into the U.S. China's Trojan horse into Europe. The Chinese play a long game versus the United States, very, very short term, usually a knee-jerk reaction game. And what the Chinese have wanted to do is drive a wedge between Europe and the United States, and they've done a pretty good job. Case in point, the Italians have taken it on the chin worse than any other country over in Europe with regard to COVID. I found this statement very, very telling. Walter Riccardi, an advisor to the World Health Organization and the Italian government, tweeted, "Thanks, China." So, the Chinese are doing all they can of buying up 25% of Italian companies. They are parking so that they can keep "Made in Italy" on the labels of high-end manufacturers and textiles in Italy. They're keeping manufacturing ships parked in the harbors off of Italy, sewing garments on ships. Can't make this stuff up. China quietly drops vow not to flood economy with liquidity as it injects an April record of $3.1 trillion in credit. So they have their own problems over in China, and they're feeling the pinch, which is why you're seeing so much reaction and so much sensitivity out of them, because they're a thug regime. One spot, 3 billion people, run by 600 people. And why do they think that they could do what they're doing, meaning trying to influence our election, which is exactly what they're trying to do? They do not want President Trump in office come January 1, 2021. They want him out. So I suspect that in an effort to try to make that a reality, they will apply more and more pressure to try to influence our elections. And why not? They've seen what we've been able to do for many, many years, for right or wrong. I'm not drawing any conclusions here. But Lord knows they're taking a page out of our textbook. These are just some of the countries we've attempted to overthrow, many of them successfully. Iraq, you could argue that was a mistake. Libya, definitely a mistake. Syria, Ukraine to a lesser extent, leading to our current tensions with the Russians. So, a lot going on here with the Chinese. And while you have many on Wall Street that are focusing in on the price to earnings multiples and why the markets should continue to rally and how the economy is going to recover, they're not counting in geopolitical influences. And I know many times I don't speak about it, but I watch it very, very closely. I get calls many times. I'll probably get one from my father after this today, talking about how I shouldn't be so high level with my analysis. But geopolitical factors matter. And if we see a threat of a trade war with China come back on the horizon, or the renegotiation of a phase one trade deal, which is not going to happen, you should expect to see pressure on these markets. And it has nothing to do with COVID. Well, in reality, it does. That's the backdrop. That's the pin that's pricking the bubble. But they are taking advantage of the United States at current a horrible, horrible fiscal and monetary policy. The fact that we have a new scandal on the horizon, what appears to be a coup d'etat, which is now coming into the limelight, that'll dominate the headlines, much as Russiagate did for 3 years. And they are going to seek to take advantage of our dysfunctional democracy, our republic, while they try to influence our election. Have no doubt about it. This is not going away anytime soon, which is why I spent so much time talking today about China and the headlines. It's not going away, and I don't think it's factored at all into the metrics or the multiples of the stock market. Now, taking a look at the S&P 500, when I went to bed last night, let's go to a 4-hour chart. When I went to bed last night, we were down about a little over a half percentage point. We've bounced back some, and you're going to have at 9 o'clock, all of a sudden, we're going to have Steve Mnuchin on at 9 o'clock this morning, Eastern Standard Time, making sure that this market does not roll over. The Fed has announced that they will be buying bond ETFs effective today. Blackrock is going to make $15 million in fees in one day alone. So this ridiculous, pardon me, I'm taking sips of coffee here. This ridiculous reaction to COVID is ongoing, and they will not let this market drop. Every time it appears as though we're getting ready to roll over here, what happens? The thugs come on TV getting ready to bid it back up. So the E-minis are down spot 3.2% on the morning off the lows. Mid caps down 0.75 of a percentage point. Again, off the lows. The Nasdaq 100, which is basically the driver of the stock market at current, remains down. And yesterday, this is a 4-hour chart. When we woke up yesterday morning, we saw the Nasdaq 100, for all intents and purposes, the trip Qs. They had broken down below support here in red, which had marked the lower band of support. Let's go to the trip Qs proper to illustrate. They had traded down below yesterday morning, pre-market, this lower band of support yesterday. What did they do? They recaptured that support level by the end of business yesterday, only overnight to give it up yet again. So while the triple Qs, I'm going to go over Microsoft chart. That's a member stock chart request I'm going to be going over shortly. While they look very, very strong, there's an Achilles heel there, and I'm going to go over that chart in a moment. Because we too, like the Chinese, can play the long game to the short side, pardon the pun. Moving on to gold. Gold had closed down yesterday below the $1,700 mark. We're back above it again today. You saw bond yields rally yesterday. Tips rolled over, as did bonds, of which we are short and remain short. In reaction to that movement, gold sold off, the dollar rallied. Let's take a look at bonds this morning. We'll go to the 10-year. They are up slightly. You can see the sell-off from Friday through Monday, sending yields higher, and we broke out strong on the 10-year yield on a weekly basis. And in all probability, given the breakout, I went over this last night on Market Wrap, it appears as though we're going to close there. While we may pull back, retest a breakout point, yields broke out. The 10-year yield has broken out on a weekly basis. So yields are on the march. Historically still low, no doubt about it, but keep an eye on bond prices and yields. Good morning, Will. Thank you, sir. I hope you're well as well. Moving on to the U.S. dollar. The dollar is down this morning. You can see that big move higher overnight, Sunday into Monday, and through to yesterday after a big sell-off after hours on Friday. And we now have a new weekly high on the U.S. dollar, trading back above the 100 mark on the Dixie. And that is helping keep a lid on the price of gold. Nat gas. A huge week last week, only to reverse later in the week. Look at that beautiful move up higher and then hammered. Too bad. Thought we would have had a nice weekly breakout. We'll keep an eye on it. Remember, Thursday is Nat gas inventories report. A lot can happen. Here's the Russell 2000, which I skipped. The Russell is up this morning. Think about that. The Nasdaq 100 is down along with the S&P 500. And the heavily shorted small caps are up. Go figure. So it looks like what they'll try to do here this morning is what they tried to do, and what they did do, not tried to do, what they did do, and we traded it, was they're going to try to spike the small caps yet again to keep this market, at least the illusion of a bull market, alive and well. So we're seeing this nice W formation, again, 4-hour chart, W formation, a higher low, and it looks like they're going to pop the small caps up higher today. Yeah. Well, I think HYG and JNK are on their shopping list to buy, meaning the Federal Reserve. For those not looking at the chat box, let's take a look at silver, which was looking good. It stopped looking all that good yesterday. Good morning, blockchain. Blockchain Bull, good morning. Yep, IWM got a gap and could take S&P to 3,000, right? 3,000 versus 300. Silver looking really, really good here. on a 4-hour basis. We're up nearly 3/4 of a percentage point. All right, so silver, very, very interesting. We were in a very tight consolidation, and we broke out. That breakout had failed late in February, consolidated further. We have broken out yet again on the 7th, consolidated, pulled back a little bit yesterday. Now it appears as though we are beginning to pick up steam. And we're right on the verge of a breakout. Remember, this is a 4-hour chart, so more volatile than a daily chart, obviously. So we booked profits on silver a while ago, several weeks ago, and we're looking to get back in, and this is looking pretty healthy for a re-entry. So silver looking very strong this morning. Got you, blockchain. Thank you for the clarification. What else do we have here? Let's check out soybean futures. For no other reason that I'm watching food prices, and soybean futures continue to consolidate here. You would think that if the Chinese were following through on their phase one trade deal, we would see more of a bid after the huge sell-off in soybean prices that we had seen during the trade war. Look at where we were versus where we are now. Still very, very low. Maybe they picked up production, but I tend to doubt it. But soybean prices continue to strengthen here. So where I have futures trader, I'd be watching for a breakout here on soybean prices. The only fly in the ointment, if that phase one deal gets thrown in the garbage, then it'd be interesting to see the price action here on soybean prices. Probably not going to be favorable. Wheat prices, very weak. They were trying to break out. That breakout has now failed. All right, let's check out Bitcoin. You have Paul Tudor Jones out there, one of my iconic traders. Very bullish on Bitcoin. You know, we own a very small position. I'm so afraid of at some point in time, if this thing becomes a competitor to the U.S. dollar, that these politicians just regulate the hell out of it, or try to anyway, making it horrible for somebody to own Bitcoin, thereby crushing it. So I just get worried about the federal government. And we saw a big gap down on the 10th. I'm not sure what caused that, but not good. That's a failed breakout. But Paul Tudor Jones, very bullish on Bitcoin. Oil prices, we didn't go over that. This is crude. Brent crude. Inverted head and shoulders set up here. Left shoulder, head, right shoulder forming. Here's a neckline. Let's make this a tripwire. So they may try to get a rally in oil going here. So oil looking interesting this morning. Up 1.5% this morning. I think we're good with futures. Let's go back to the S&P 500. Pretty much unch. Okay, we'll check the news flow as we proceed into the open. Let's go to some members stock chart request. I have a bunch to go over here. Okay, first up, Barclays. I don't like the banks. I went over this in great detail last night. You're seeing JP Morgan and Wells Fargo breaking down below weekly lows. Wells Fargo last week, JP Morgan so far this week. So those triangle formations, just to illustrate. Excuse me. Sorry about that, folks. I'm not sure what's going on with my internet today. Just to illustrate, let's bring up Wells Fargo. And Barclays is a European bank, which I favor even less than U.S. banks are current, because they are not as well capitalized. And here's Wells Fargo, the best of the worst money center banks here in the States. And they broke down last week. This week, a continuation move lower, and they were down last week on big volume. Note they broke the lower band of support, and they closed there. So they're a stone's throw away, only a couple of dimes away from breaking down below the March lows. So let's keep that in mind as we talk about the European banks, which I like less. So back to Barclays. Let's bring up Barclays on weekly chart. We'll keep it consistent with Wells. Looking healthier by far than Wells Fargo, but we have an inside week. No new high, no new low. And you got to be wary of a big bank like this. Trading in the single digits. Just like Deutsche Bank. Okay. So an inside week, it's not a sell, it's not a buy. On a weekly basis anyway, daily chart. Daily chart looks interesting. We broke out last Thursday, and we broke back down on Friday. Well, actually yesterday, I'm sorry. We broke out last Friday and broke back down yesterday. Sorry, it's still early, only on my first cup of coffee here. If we fail to hold 470 per share, the stock becomes a short. I wouldn't buy it right now because this is a bull trap. We had broken out, we failed, now we're back down into this trading range. I don't like that. So unless we take out 528 per share and close there, I would not buy these shares. Let's take a quick look on TrendSpider, see if I'm missing anything. Trend Spider's algo has us right up into weekly resistance. Let's go to a daily chart. Do they have us breaking out? Bull trap. They're not picking up on it, but here it is. There's your bull trap. So we're in a consolidation, a wedge formation. You need to wait for a breakout above this resistance level at 512. Ideally, a close above 528 to validate a breakout. And then you can look to get long. It's short on a breakdown below for, let's call it 475 per share. No great reason to go buying these shares just yet. Or shorting them. They're a watch. Blockchain, have you ever saw one or the other as a leading indicator for the other, Barclays and Wells Fargo? I can't say that I look at the banks that way on an individual basis. I'll look at the money center banks versus the regional banks. Like I'll bring up Regions Financial or the DPST, which is the leveraged ETF, putting you long of the regional banks versus the money center banks, the XLF or the FAS. I'll look at them that way. If you want to bring up, Deutsche Bank, we could do that, which is more of the proxy that I would use for the European banks, or Credit Suisse versus Barclays. And this is just an ongoing basket case of a zombie bank. If they have to get bailed out, they will get bailed out by the Germans. So, am I really worried about Deutsche Bank going under with their, I don't know how many billions, if not trillions, in the derivatives book? Probably not. The Germans are going to have to go in and bail out that company. But I digress. So, no, to answer your question, normally I don't look at the banks on a European bank name versus a U.S. bank name. Let's move on to OPK. OPCO Health. Healthcare is looking very interesting. You're welcome, Blockchain. I was taking a look last night at Cure, which is a leveraged ETF putting you long of healthcare. How did I get back here? And you can see that Cure broke out yesterday. Actually, they broke out last week, consolidated and continuation move higher yesterday. And we're at the verge of a major breakout here on Cure. Higher lows on Stokes. So this is an ETF that's looking really good. And you need to also keep in mind the biotechs are ripping. This is the BIB. Here's a monthly chart. Big move higher on the BIB. So it looks like we could see some leadership come up through the ranks in biotech and healthcare. So with that, let's go back to OPCO. I got off the tracks there. So this is a monthly chart of OPCO. I don't know their financials. We're just looking at the technicals. We remain in the downtrend. However, we've seen a nice multi-month consolidation. We're now beginning to move up and into resistance. Weekly chart. Now, on a weekly basis, we broke out the week of April the 20th. And now it appears as though we are beginning to flirt with a breakout on a weekly basis. So what I would want to do here is create an alert. I'll keep this active for a while. Into next week. And there we go. If we pull back to support here at around $2 per share, that would be interesting as well. Daily chart. Really nice move yesterday. I mean, outstanding. So OPCO is looking interesting. I wouldn't buy it here as we're right at resistance. We want to watch for that breakout and a close above this resistance level. Allow that alert to work for us. And you can see that volume drops off dramatically. If, in fact, we do break out above this resistance level, that means you're not going to have a ton of resistance above. So OPCO looking fairly good. Let's bring up the candles, the raindrop charts. Check out VWAP. A good close. You had that pregnant back half of the day yesterday. That means you saw buyers into the close. Always a good sign. So we like OPK, but we like it on strength and a breakout. Looks very promising. And we like the sector as well. RMD, ResMed, another medical device maker. Or a medical device maker. I'm not sure if OPK is a medical device maker. We have a breakout here on a daily chart. We'll come back to this. Let's check out where we are on a historical basis. Monthly chart. ResMed. They make sleep apnea gear. I traded them many years ago. And we are right at resistance. This is another one where we want to create an alert. We're not day traders here, so we really rely upon these alerts to remind us of opportunities, which may not appear for several days to a couple of weeks. Good morning, Oliver. Let's keep this active for a while. Weekly chart. Yeah, very nice. We broke out of a consolidation here. You know, if we see weakness in the market, you know, this would be a great support level. I can't create an alert here for whatever reason. At the 163 mark, 164 mark, to open up a position or to add. But I think we would be pressed into opening a position on a breakout at current. This is a very strong sector. It's emerging too, looking really good. Daily chart. Again, here's that resistance level. You can see how we struggled with all this volume here. We struggled for several weeks getting through all this resistance. And now we're through it. And it looks as though we're going to move up higher here. So ResMed looking very, very bullish. Let's check out the VWAP. How did we close out the day yesterday? Very nice. We may break out today on ResMed. A little bit of selling into the close yesterday. So bullish on ResMed. The DBA, let's go over to we've spoken about this. I have a saved chart here I've been watching. This is Invesco. And then I'm going to leave off with Microsoft. Oliver, MAG. All right, we'll leave off with MAG. Where's the DBA? Here we go. Okay, so we spoke about the DBA a couple of weeks ago. We were looking for a breakout. We got the breakout last week. This week, we do have a new weekly high, but we have resistance of $14 per share. So I wouldn't go buying the shares just yet. I think we have time, especially with the talk of a renegotiation of a phase one trade deal, because the trade war is a specific reason why the DBA went into free fall. If that resumes, that's going to spell trouble for the DBA. And yesterday, we had an outside reversal day, a bearish engulfing, whatever you want to call it cupcakes, but not a good day. The 50-period moving average, which is declining, is acting as overhead resistance. Volume rose. So I wouldn't buy the shares just yet. Allow them to come in. I think they're going to come in further, especially as all this China talk continues to heat up. We'll go to MAG, and then we'll leave off with Microsoft. Silver. This is a silver miner, Oliver? You like that, blockchain? I hate when people get caught up in the terminology too much. All these guys, this is a wedge formation, inverted candlestick. It's either bullish or bearish. Okay. Let's go take a look at, it's gold miner? No, I think it says MAG Silver Corp. Maybe it's a mixture of both. All right. So the higher level view, like we always like to do, where are we at? Now, these volume bars here are huge. That tells you that there's a tug of war, which is being validated by price. I'm not telling you anything you don't see in front of you, to be honest with you. There's a tremendous battle going on here for this turf between $12 per share and $10 per share. But once we get up and through $12.78 per share, these shares are going a lot higher. Let's get rid of this. Okay. So far this month, we've attempted to break out much as what we did last month, which was a huge month, but we're being rejected at resistance at around $12.71 per share. Really, I would go with $13 per share. You rally and close about $13 per share. It's probably going to be off to the races. Weekly chart. All right, weekly chart is telling me, again, let's just use $13 a share because this is rising. What I would do is set an alert. There's nothing really to do here. You know, it's a good-looking chart with promise, but we don't want to buy the hope. We want to buy the fact. We'll keep this active for a while. Now, if we pull back down here, which I doubt, to around 1137, that would be interesting. I need to make notes to myself. I do so many of these. All right. So there's our alert set, ready to go. Set it and forget it. It's an interesting chart, but I can't buy it until we get a breakout above resistance up at $13 per share, or a pullback to support, which is at current around 1071 per share and declining. Daily chart. Blockchain, I'm not loving the 3 times ETFs. I think what this last sell-off showed us is that they can't manage these leveraged ETFs during times of high volatility. You saw it with JNUG. You saw it with a bunch of oil ETFs. You saw it with NUGT, which is why I got away from the 3 time leveraged ETFs, and I go with like with the gold miners, the junior miners at current. And yeah, and even USO. Think about it. You know, that's paper oil, and they blew up. They had to do the inverse split, the reverse split, I should say. Getting back to MAG really quick. Daily chart on MAG. We broke down yesterday. Below the support level. But we do have support below. So I don't think it's all that big of a deal, especially with oil. Silver threatening to break out this morning. Again, you know, if you felt the need to scratch the itch, fine, at support here. But I would wait for the breakout above 1275 to 13. Let's take a look at the VWAP. What happened here? Yeah, you saw a lot of selling into the close yesterday. So just be careful going into today. This may hold, but we did break down below support level yesterday. We did manage to hold support, but we saw selling into the close. So just keep that in mind. Be careful. All right, I want to leave off with, you're welcome, Oliver. I want to leave off with Microsoft this morning. You know, Microsoft is being viewed as impervious to a sell-off. And I keep wanting to revisit 2 charts with Microsoft. And granted, it's a powerful chart, no doubt about it. But there comes a time where stocks become overloved. And I don't think that Microsoft is immune from that. Now think about where we're at. We're stone's throw away. We closed out the day yesterday at 186.74. The all-time high back in February was 190.18. We're right there. We have cleared the filling of a gap. It looks like we're going to head up higher here. We've certainly made a new weekly high. So I'm making a bull case at current, but I'm going to point out the bear case in a moment. Outside reversal bar yesterday. And again, it appears as though we are going to move higher. Now, here's what we need to keep in mind. Besides the fact that volume is drifting off here a little bit. What we need to keep in mind is the higher level view. multi-time frame analysis. And this is a quarterly chart of Microsoft. And Microsoft has RSI on a quarterly basis, which continues to rise and is at current at 90.79. Think about that. Last quarter, we flashed Doji Star formation, which is a sign of indecision at the top of a trading range. That does not bode well for a stock with RSI above 90. And when you take a look at Microsoft on a yearly basis, and this is really high level, RSI is at 92.52. And we are leaning into the third standard deviation Bollinger Band, which in short we're not supposed to be, but we've been there for the past several years. So this can go on for a bit longer. So just because I'm making these observations doesn't mean that we want to go running into this morning and shorting Microsoft by no stretch of the imagination. In all probability, in the short term, it's heading higher. So don't get me wrong here. Here's RSI on a monthly basis, nearly 81. But the question is, as we near the highs of February, I always pull out the adage that I always like to use, and it's this. The test is always at the top. Do we break out or do we fail? And do we break down? That's the key question. So keep a close eye on Microsoft, because as goes Microsoft, in all probability goes the Nasdaq 100. And we're going to leave it off with that today. Everybody have a profitable trading day. And I will talk to you later on this evening, members, and tomorrow morning on Swing Trading Today. Be well.